Before we begin, let's walk through our webinar platform together. Each of the buttons at the bottom of your screen relate to sections in the ON24 console. The speaker view is where you will see our presenters throughout the webinar. The slide view is where you'll see the accompanying slides. Our poll questions will also appear in the slide area. Be sure to click directly on the slide to answer poll questions throughout the webinar. You can resize these widgets for a larger or smaller view. You may follow along also with a PDF version of the slides that can be found in the related content widget. The CPE criteria section details the requirements you must meet to receive full credit for CPE in this session. To obtain CPE, you must do two things. First, be on the live webinar for at least 50 minutes, and second, respond to 3 of the 4 polling questions that will appear throughout the presentation. You can track your viewing progress in the Earn CPE widget on your screen throughout the webinar. By registering for today's event, you will automatically receive an email after 24 hours with a link to download the slides and a link to view the recording. Additionally, if you meet all the criteria and qualify for CPE, a link to your CPE certificate will be in that email as well. Please remember that it does take 24 hours for that email to be automatically generated, so look for it sometime tomorrow afternoon. For CPE-related questions, please reach out to cpe@yptc.com. In the related content section, you can access any accompanying materials for this webinar. This includes a PDF copy of the slides and many times will often include related resources. Reactions from our audience throughout the webinar will float along the console screen. Use the Q&A section to ask questions directly to our speakers throughout the presentation. In the speaker bio section, you can find more about our presenters, including their contact information. If you need technical assistance, please use the help button below. Many times, technical issues can be resolved by opening the webinar in Google Chrome or refreshing your browser. Finally, the evaluation button contains our post-webinar evaluation survey. Here is where you can share your commentary and feedback on the presentation. We hope you enjoy our free webinar. Now, let's get into today's topic.
All right. Welcome, everyone, to Revenue Diversification, Strategies to Alleviate Pain and Achieve Financial Sustainability. We will be focused on the performing arts, but I'm pretty sure everybody will be able to get something out of this today. So first, I'll just introduce myself, and then I'll turn it over to my colleague to introduce herself. I am Justine Townsend. I'm a lead our arts and culture specialization here at the firm. I'm a CPA, and I also teach financial management for arts leaders at the University of Houston in their Masters of Arts Leadership program. I also started my career as a theater performance major and was an actress for a long time. So I come to the arts as an artist. Maria?
Hi, I'm Maria Leonetti. I'm an associate at YPTC based in Philadelphia, and I work on our arts and culture specialization team with Justine. I'm also a trained opera singer. So like Justine, I come to the arts from the arts, and I have a bachelor's degree in music and an MBA in finance. I have more than 16 years of accounting experience and 22 years of performing experience in operas and musicals.
We're so lucky to have a trained opera singer on the call. As a big opera fan, I love it. This is a little bit about YPTC. YPTC is your part-time controller. We're a professional service firm that specializes in nonprofit financial management. We've been around for over 30 years, and our very first clients were arts and culture clients. So arts and culture has always been at the heart of YPTC and what we love and do. Now we're kind of huge. We have almost 700 staff working all over the United States on clients all over the United States and expanding internationally as well. We have over 1,800 clients. So if there is a problem, we can probably solve it. And today we're going to work on these problems. So our learning objectives today are identifying key challenges and opportunities within the economic landscape currently affecting the performing arts industry. Then we're going to discuss revenue diversification strategies that support financial sustainability. And then we're going to recognize the importance of evaluating those strategy results.
The learning objectives today will be accomplished in 3 sections. First, we'll look at the current economic conditions, what has led us to this moment, what's happening and why. Then we'll look at those revenue diversification strategies, looking at a bunch of different strategies and factors to consider when determining which one will be right for your organization. And then we're going to evaluate results. We're going to ask questions, give you the questions to ask, come up with some best practices and procedures to determine what yields the best results for your organization.
But first, a poll. So if you're getting CPE, then you need to stop what you're doing and answer the poll right now. And we want to start with who's joining us today. So are you a development team member? Are you an executive director? Are you a finance team member? Or are you something else? And if you're something else, let us know in the chat how you're coming to us. And we'll give everybody a few seconds here to respond to this. And when most everybody has responded, we'll continue and see who's in the room. So again, if you're multitasking, stop what you're doing and come answer the poll so that you can get CPE for today. We're just trying to find out who's here. I know I like to customize a little bit for who we have in the room. Okay, I am going to go ahead and launch those poll results. So last seconds to respond. Okay, great. And our poll results. Okay. Everybody here for the free CPE? Almost 59% here for that free CPE. I love it too. And then a good amount of executive directors and other. Oh, and I see board members in the comments. That's fantastic. When I say answer in the chat, no, there's no general chat, but yes, in the question box, you can answer those questions I ask of the crowd. Oh, okay, great. I love the kind of spread out we have here. It helps us really focus and ensure that we're meeting your needs.
So let's get started with looking at economic conditions in general. Okay. I'm sure you're no stranger to talk about the economic trends happening on a local, national, and even global level. Higher prices have led to painful budgets for the arts the last couple of years. We are less nimble to just cutting costs than some other nonprofits, especially when many of our costs are primarily direct labor, defined by a union CBA in many cases, and direct production expenses. So on this slide, we have a formal definition of inflation, the measurement of the increase or rate of increase in prices of goods and services. But we know what that basically means is that our money doesn't go as far as it used to, even last year. We may not be able to control these increased costs, but we can take steps to offset the impact of inflation, the biggest one being new revenue streams, or we can increase our current revenue sources.
So now we can talk about the economic pressures that we face. And we're going to divide them into 3 categories. So we're going to start with price, or the cost of delivering mission. Then we're going to go into income, whether that's earned or contributed. And then we're going to talk about demand, meaning the demand for your programming. Throughout the rest of the presentation, we'll be identifying strategies related to each pressure here to empower you to help create that financial stability, regardless of how these pressures might impact you. So thinking about price, inflation is measured using an average of prices in general, but the specific prices we pay for things may be increasing at different rates. And as those price increases are at different rates, when it's everything that's increasing, even if it's some, utilities might be increasing at a slower rate than your interest rates or vice versa, but it doesn't matter. The increasing prices are going to impact you the same. Especially we've seen staffing has had such a significant increase over the last couple of years with the Great Resignation. So data, now we're going to get into income, and data from one study showed that contributions to nonprofits on average will decrease about 0.5% in an economic down year, and it increased 4.7% in an economic up year. So you might be seeing some of this already at your organization. We can expect these impacts to increase as the inflation impact continues throughout our entire economy and begins to affect donors more and more. So this can affect not just your amount of contributions, but also the size of those contributions and the frequency of those contributions. And that's something that we saw from the Giving USA reports. So offsetting price increases is going to require some combination of additional revenue, reserve spending, and or change to your operations costs. So you may realize when building out your budget that existing grants awarded in previous years may not go as far as they used to. So for example, you may have had a grant that covered an entire production member's salary or your artistic director's salary, and now that grant no longer covers everything. It's not going as far as it used to. So you need to find additional funding for that same program or for that same salary. And it really increases kind of a hybrid pressure of price and contributed revenue. And then as we look to demand, the economic uncertainty kind of prevalent throughout for the last few years and continuing, and the rising inflation can be associated with difficulty in society at large. So some nonprofits came out of the pandemic stronger. Unfortunately, the arts had kind of the opposite impact, despite the fact that we had that Shuttered Venue Operators Grant and the paycheck protection programs really helped sustain the arts organizations. But we are still struggling as we're working towards that audience return. And I think Maria is going to get into some of the specifics for arts.
Now that we've established the situation for all nonprofits, we'll discuss these pressures in the same categories for the performing arts more specifically, as Justine just said. For price, inflation drives down the value of the ticket revenue you receive, and the difference between the cost per performance and the revenue per performance will widen. In terms of income, during the pandemic, we didn't see as many opportunities for touch points with donors, and many donors and audience members moved away from city centers during the pandemic. So now they're farther away from a lot of the places where we're doing our productions. And for demand, as basic needs cost more, there's less available for the arts. But I would argue that the arts are a basic need. But audience return numbers are still 27% less than 2019. Even though 2022 significantly increased from 2021, 2022 to 2023 appeared to have held steady, but it didn't increase the way that we'd like to see.
So that being said, we'd love to hear how it's impacted you. So next poll question number 2. So for the 60% of you trying to get CPE, stop what you're doing, answer your poll question so you can get CPE. But for everybody else, we just really want this information. So in the context of ticket demand, which of the following has your organization experienced? Have you had an increase in demand since 2019? Are you still in that decrease in demand from since 2019? Have you gotten back to level? Are you selling the same number of tickets in did you sell the same number of tickets in 2023 and here at the beginning of 2024 as you did in 2019? Or is this not applicable to you because you don't sell tickets? So we'll give it just a minute. I mean, and if you don't sell tickets, I mean, but you do, let's say you do free performances, please do respond though on the change in demand from your audience, because I think audience demand for paid performances and free performances slowed down at the same rate as what the studies are indicating. Okay, so with a good percentage of you responding, I'm going to give everybody one more second. All right, let's go ahead. So we've got only 12.5% with an increase in demand since 2019, 24.3% with a decrease in demand. Oh, nice. 8% of it have returned to level, and 55% not applicable. All right. Oh, I see there's really good conversation happening in the questions, which I just love to see. And so I see there were some people who they said not applicable because they do free performances only. And then some that are not at an arts organization, but have seen decreased demand for their services due to COVID. So how does that impact you? How else does inflation directly impact your organization? We can look at average ticket prices. And I think this is a great example of how you can see a really kind of big change in a very short period of time and really see the impact of inflation. So if we look at 2019 ticket prices, the average price of each ticket from 2019 without inflation, that was $33.10. But if we add in inflation and we make the 2019 tickets the same price in 2022 dollars, right? So we're adjusting at the 2022 dollar rate. Then we were really getting $37.74 per ticket, and now it's $35.13. So it might look on the face like it's an increase of $2.03, but it's actually a buying power decrease of $2.61, which is almost a 7% decline in average revenue per ticket. That is applicable whether your organization sells tickets or not. When you think about revenue in general, how big of an impact inflation can have when you do that adjustment for the present value of that money. And then coming back to that decrease in demand, this is a study that the NEA conducted with the Americans for the Arts. And it's a study of audience behavior. Now it is self-reported, so I'll add that caveat. But what we saw was a significant decline in the population of the U.S. attending these performing arts events. So if we look at opera, is down 68%. And I mentioned at the beginning, I am an opera fangirl. That was pretty devastating for me, and I know for Maria as well. And then right behind that, non-musical stage plays down 52%. And that's what kind of performer I was. I was a non-musical stage performer, so that really just breaks my heart. And then classical music being right there behind it, having those being the kind of three biggest declines, along with dance right there next to it. So some pretty significant changes and a real need to look at what are some other ways to bring in revenue for these organizations.
So here's another interesting statistic. These numbers came per Giving USA. Total contributions to the arts and culture sector grew by almost 3% in 2022, but declined by almost 5% when you adjust for inflation. So it may be deceiving when we see our giving increasing in dollar amount, but it's not really buying us anything more. This is why your contributed revenue can increase, but still feel like it's declining. As we think about our operations for fiscal year 2025, approaching the economic landscape with neutrality allows us an opportunity to view the peaks and valleys as the natural cycles of change. And from this foundation, we'll share strategies that will assist in tackling these economic opportunities.
So let's think about your organization in the general landscape. And in order to kind of hit the majority of everyone, so if you have a budget less than $1 million, I'll tell you it's just a little bit different. The numbers were just a little bit different for under $1 million. But we did the 1 to 5 million and then the 5 million to 25 million. And what we saw was program service revenue, which is your ticketing revenue, is only about 32% of total revenue. And performing arts orgs 5 to 25 million, and then performing arts orgs 1 to 5 million, that ticket revenue is making up about 43% of total budget, total revenue. And you can see there's kind of a light mix beneath that, right? On the left there in our 5 to 25 million, where you can see the breakdown of that other category, you really see it's a pretty tiny mix in between each one, but each one of those adds some dollars to your budget.
Okay, so here we have another poll question. So again, if you need to get CPE, make sure you are paying attention and can answer the question on the screen here. Self-evaluate your organization's revenue strategy. Which of the following describes your organization best? How many think we need to grow our contributed revenue, or we need to grow our ticket sales? We need to evaluate other earned revenue options, or our revenue mix is perfect. We don't need to make any changes, and I don't know why I signed up for this webinar. Okay, I don't know. Justine, let us know when we have a good amount of people who've answered.
We're coming in slow, so if you want CPE,
okay,
and you're multitasking, stop what you're doing and respond to the poll so you can get your CPE. And I do see there are some questions in here about, oh, I didn't know this was going to be specific to the performing arts. If you're coming to us from a different types of arts organization, there will be strategies, revenue strategies that will be able to impact your organization. There are so many revenue strategies that we're going to cover. We're going to cover over 30 in a minute. So there'll be plenty of time. I'm going to go ahead and post the poll response.
Okay. Yeah. So really, a lot of people need to grow our contributed revenue, and also evaluating other earned revenue options. Very few think the revenue mix is perfect, and a small group also saying they need to grow ticket sales. So that's great, because these are the strategies we're going to talk about.
Mm-hmm.
Okay, so now we're going to move on to the really exciting part. We're going to discuss the actual strategies. So we have 35 different ideas for strategies to help you diversify your revenue streams. Some of these might be things you're already doing, but I hope at least one will be something that you can take away for your organization. Okay. We're going to start by talking about contributed income. The paradox is that many nonprofits need significantly more revenue to operate during inflationary periods, but the increase in inflation also reduces donor willingness and ability, because donors also feel the pain of inflation. So when we're talking about contributed income, we have noticed trends of foundations shifting their giving strategies from directing funds toward performing arts organizations to organizations providing social services in their communities. Funders are increasing in sophistication. They're requiring additional data and reporting as part of their funding requirements. So as you are receiving less, there are a few things that your team can do. Data speaks to donors. So if your donor knows exactly where their money is going and the exact impact of it, they might be more likely to donate. I recently heard some appeals on NPR where they were giving potential donors or members an idea of what even small contributions could enable them to do. Of course, you do have to work with your finance and development department to word things carefully. You want to avoid raising restricted funds. So you want to let donors know the impact of giving without promising to perform specific services in return for the donation. And as you can see here, we're talking about looking for new grant opportunities. And if you're struggling with having the time to find grants and apply for grants, we at YPTC actually have an entire department that handles this and can help you with this. They can help you find the grants and write the applications. There are a few that we're watching right now. There are federal grants for arts organizations from the National Endowment for the Arts. Grants range from $10,000 to $100,000, and they require a match. Grants are offered in a wide variety of artistic disciplines such as dance, museums, opera, theater, visual arts. And the agency identifies the types of projects such as exhibitions, collections care, capacity building, or performances that they prefer in each discipline. There's also a new NEH grant focused on music wellness programs, and we're recommending that for some organizations as well.
So now we can talk about in-kind donation. So this is a great way to cut the amount you're spending, your out-of-the-door expenses, your cash-out expenses. It's not going to decrease the number of expenses on your statement of activities, but it will decrease the amount of cash going out of the door. And a lot of times that's what we're really trying to manage, right, is that cash balance. So one thing that we see left on the table a lot is when you are negotiating discounts on special events or negotiating large discounts for a production that you're putting on. When you get a large discount, that can be an in-kind. If on the invoice, it says the tangible item that's being donated. Services can only be counted, can only be recorded as in-kind revenue if it is a professional service, like an attorney or an architect or a pilot or a accountant. However, most of the time when you're getting those catering discounts, it'll say like catering discount 30%. If it says that you got a discount for actual food or they gave you free tablecloths, then not only can you record that discount as revenue, you also get to steward that discount better by giving that caterer an in-kind note, like an acknowledgement letter, and then they can take it as a tax deduction. They cannot take a tax deduction for giving you a discount, but they can take a tax deduction if they put on the invoice what tangible items they specifically gave your organization and donated to you. That is great stewardship, and that's how you grow the amount of in-kind donations that you're receiving by properly stewarding them. You want to also evaluate whether or not your income targets need to be modified based on inflation, and ensure that you're taking a realistic view on what you can generate from campaigns that you've done typically in the past. Really evaluate. And then also at this point in time, when you're evaluating, take a look at that donor pipeline. Tailor your donation and contribution revenue strategies to your donor base. So successful organizations will build out a sophisticated donor pipeline that considers the different strategies for separate buckets of donors. So you want a different strategy for large donors than you have for mid-level donors, right? So one of the things that is great for a mid-level donor to increase their giving is moving them from an annual gift to monthly giving. If somebody is giving you $500 a year, they can afford to give you $100 a month. That increases their giving to move them from that annual gift to that monthly gift. And if you move them to the monthly gift, they may just forget to ever cancel their gift. So I have been giving, I think, $10 a month to a public radio station I haven't listened to in 20 years because I used to listen to it every morning. And it's not set up on my debit card or my credit card. It's set up to come directly out of my bank account. So it would be a bigger problem for me to cancel that. It would take more effort for me to cancel that donation than it is for me to just let it happen, because I'm fine with supporting public radio at $10 a month. So they have gotten over $1,000 for me, really over $2,000 for me, that I probably wasn't planning on giving if it hadn't been for that monthly donation auto renewing. So there's a real opportunity there to increase your giving.
So now we're going to start to get into some earned income strategies. And basically here, we want to think about the assets that we have and how can we monetize those assets when we're not using them. So the big one that many people think of is their venue, if they own their venue. And in between productions, when you're not using it for running your own company's productions, can you rent it out to other local theatrical companies that might not own their venue? I know I've experienced this many times. I just performed in an opera a few weeks ago, and the company that I was working with does not own a venue, and they rented space for a week from a local theater company. So the opera company is able to use the venue, and the theater company makes the rental income when they wouldn't be using their venue otherwise. In addition to renting your venue to other theater companies, you can also rent your venue for weddings or other special events. And not just renting space. Do you have costumes, sets, props, or wigs that you could rent out to other companies? Do you have historic costumes or set pieces? Do you have a costume that at one time Pavarotti wore in a production? Would there be a local museum that would be interested in displaying that for a certain exhibition? So you can get creative, think about the things that you own, and if there are other uses for them that you could monetize.
Collaborations. This is my favorite one. So this is collaborating in your community and making connections throughout your network. So if you're an orchestra, can you sell orchestra services to the opera and the ballet, like the Chicago Lyric Opera and the Joffrey Ballet? They share an orchestra. So they're able to save on that expense and have a higher level orchestra. The Salt Lake City Symphony Orchestra and Opera just combined into one organization. Could you do co-productions? Could you go in together to create a new production? You want to do a brand new production of something, find a partner to do it with you so you can split those costs. And then also you get data from them. Make sure that you have data sharing in that agreement when you do a co-production. You also get to share marketing materials. Could you cohabitate with more and more organizations moving to hybrid or working completely remotely? Could you do more with less space? Could you rent out or sublet out some of your space that you're not currently using to other companies in your community, to other arts organizations in your community? Do you have a scene shop or a costume shop or office spaces or venues or stages that you may want to rent out to other maybe smaller arts organizations in your community? Or if you're one of those other smaller arts organizations, have you, in order to just find some cost savings, have you reached out maybe to your local larger venues and asked them, how could we get in on sharing some space with you? And this is a great way to build office sharing space. And then one of the fabulous things that happens with these collaborations where you're now operating in the same space is you also get shared information. And so one of the things I always say in our community here in Houston is a rising tide floats all boats. We didn't get to have the largest theater district outside of New York City without a lot of collaboration in the community and building that strong arts relationships.
So another opportunity for earned income that we can think about is with consulting and training. Many arts companies have teaching artists on staff, especially if they have a school or an education department. And so we can think about how we can monetize those artists in other ways. We might be able to develop an arts curriculum or work with a local school district. I've also seen that done with juvenile detention centers. We could also have our artists perform at corporate events. They could do improvisation games at retreats or just performances at corporate events as well. They could also do training in public speaking or training in performing. They could give lessons, and you can make that part of your education department.
It's great when you have full-time artists on staff too. Okay, another one that you might not even be thinking about is copyright royalties. Is there intellectual property you have not yet monetized that you could monetize? Are there licensings that you could do of your recordings and works? How about publishing as part of your programming or as an additional programming expansion into publishing your whether it is we've seen a lot of moving into streaming, and then are you recording those and then publishing it and offering that for sale later? Are you offering those for free? How are you handling that? Is there a way to monetize last season, this season, even for $5 to stream last season? That was in the bag. You already thought you were done with that season. Could you make a little bit more money off of it by giving people a subscription to stream last season at a really reduced rate?
So we can also think about sales as part of our earned income opportunities. You could have a gift shop. And I know a lot of people have probably told you to get a gift shop. There are some administrative burdens involved in running a gift shop. So a lot of times people will use their guild or their friends of organization to help run that for them. So remember, when you're selling items at gift shops, you do have to start thinking about collecting sales tax for those items. You can also sell recorded works of your performances in many cases, if you have them. You could sell CDs or other types of recordings.
And then, as we think about program fees, and that's tickets, tuition, special programs, one of the things I love to talk about with ticketing is dynamic pricing. With dynamic pricing, what you're saying is, I'm going to set a floor and I'm going to set a ceiling, and let the algorithm determine the demand for this show, and that will determine the cost of the product, the cost of the tickets within this floor and ceiling. So that when you have a show that you're putting on that has a very high demand, and right out of the gate, people are waiting to buy those tickets when you announce, that's going to drive up that initial cost. Or if there's a mad dash rush at the end, if everybody waited, which is what audiences have been doing, which is waiting till the last minute to buy tickets, right? If there's a last minute dash to buy those tickets, then it'll drive up the cost, at least, of the price of those tickets at that last minute, and help you be more likely to achieve your revenue goals. So it makes you very responsive to audience demand and helps you to be able to maximize your total ticket revenue. Another one is tuition. Have you recently evaluated the cost of providing those summer camps, those winter camps, those after school programs? So many organizations are providing these camps at reduced tuition. If you're telling grantors, we are putting in this much and this is how much we need to raise, did you really evaluate that? What is the actual cost of your tuition programs now? Should you be adjusting that up, and should you be adjusting what you're writing to grantors? And then special programs. Are there additional programs that you want to add that you could that you normally would not monetize, that you could monetize by doing a pay what you can model in lieu of offering the performance for free? That encourages more donations, but still allows accessibility to those that you're offering the performances to free to.
So another income opportunity we could talk about is memberships. And I'm sure a lot of organizations here have a membership program. You want to make sure you identify and quantify what the member is receiving in return for their membership, because most membership programs do give something to the member in exchange for their contribution. So you want to determine whether there is still a tax deductible contribution if they're contributing something over the amount of what they're receiving in return. So if all they receive is the tote bag and they're giving you an amount that's much larger than what the tote bag is worth, then you can give them a tax deductible contribution for that. But if they're receiving, say, a free ticket to every performance in your season, and the value of what they're giving you is about the same as that, then they might not receive a tax deduction for that. So you want to make that determination, make sure you're giving them the right documentation. But either way, we want to recognize our members as supporters, no matter what the result is of that transaction. You also want to make sure you have timely renewals of the memberships. So you want to track when they expire and communicate to the members prior to the renewal. You may offer incentives to renew prior to the renewal date. And you also want to be tenacious about reminding them if their memberships have expired. We would recommend every 1 to 2 months after it's expired, just send them a reminder, say, are you sure you don't want to renew? And you can also do monthly giving programs, which Justine alluded to earlier. Instead of asking for an annual donation, you can consider whether you could ask for more by making an automatic monthly donation. So that's a great way to ensure steady cash flows between seasonal programs and your fundraising. And lastly, you might want to consider whether you can stratify your giving messages. Research has shown that supporting the organization is one of the top reasons that millennials and Gen Zs will join membership programs. but older generations tend to join for the value of the benefits. So there may be an opportunity for you to evaluate whether you can stratify your messages to different groups of potential donors when you're soliciting for memberships.
Special events is my favorite thing to talk about because I think special events are an opportunity that we often leave unpillaged, is the best way to say that. Special events are a donor cultivation event. So if you have a big gala and you put a lot of effort and time into it, there's a lot of opportunity cost associated with your gala. So a big KPI to be evaluating from that gala is how many new donors did we get from it? Because the idea behind the gala is our donors who love us the most are going to buy tables and then bring their friends. And hopefully their friends love what we do and are passionate about our mission and care. And then we can start cultivating those friends and bringing them into the fold as donors. So really tracking what were the results from a gala is not just how much money did we raise the night of the gala, right? Not how many seats did we sell and what did we make on the auction and the raffle and all of those good things, but also what did we make from those new donors that we cultivated, from those new relationships that we built at that gala that we would otherwise have not had access to. That's a key piece of information that we really want to evaluate. And once you're evaluating that, guess what? You really incentivize your development team to follow up and treat it as a cultivation event. If that's a KPI you're going to be evaluating them against, then they'll care about it. Another option is to do behind the scenes tours. I like to offer this as a benefit to your very high level donors and then sell tickets to your mid-size and your lower donors. And then they can see, oh, if I'm a higher donor, I get to go to these events for free and I get a special talk afterwards. But really giving people the opportunity to see behind those scenes. One of the things that we have in the arts that other nonprofits do not get is fans. We have people who really love the work, who love the art, who want to participate. And so Artist for a Day programs can be very successful. Now, you really have to watch your costs on this because you can't turn it into too much. And if you have to add a bunch of rehearsals, that can maybe cost a lot. But operas are great at doing this for putting a supernumerary on stage. I think Ruth Bader Ginsburg is the most famous example of this, where she was the Washington National Opera used her as a supernumerary a few times. And she was one of their greatest supporters and a big donor of theirs. I've seen this done where orchestras say, play with the orchestra, and you get to do a rehearsal with the orchestra and invite your family members and have a little reception afterwards. That's great. All the board members played an instrument at one point in time and they love those. So there's lots of opportunities there in those Artists for a Day programs. How about time with your favorite or visiting artists? Bands, again, you can leverage, right? Patron travel events. Taking your patrons on a tour to go see other wonderful art with your artistic director will kind of get two things going. One, it gets them really passionate and in touch with how much they love the art, but also you put them in a peer pressure situation where eagles fly with eagles. You get the opportunity to make bigger asks and let that peer pressure do the work for you a little bit. Then you get lasting relationships with patrons when you have those travel experiences also. And then there's other opportunities with auctions, raffles, wine pools. Just be careful as you're adding these kinds of games of chance to make sure you're checking the federal laws and the state laws on what's a game of chance, how do you report that, and how many do you get a year? I know in Texas we get 2 games of chance a year. Well, actually, they added a third.
Okay, so another income opportunity we want to talk about is investment returns and endowments. So you should always have an investment policy. And in order to maximize your results, you'll need a cash forecast to determine the timing of your liquidity needs. And if that sounds intimidating, you can call us and we'd be happy to help you with that, because we do these standard for every one of our clients. For endowments, you want to determine your organization's ideal endowment size. 2 times operations would be ideal for sustainability. So if you have a $2 million budget, you want a $4 million endowment for sustainability. And 3 to 4 times your operations is considered to be what is needed for immortality of an organization. So for that $2 million budget, you'll want a $6 to $8 million endowment to be considered an immortal organization. So when is the right time to start an endowment? You want to think about your annual giving and how that's doing. You really want to have strong annual giving before you would start an additional endowment campaign, because very often the campaign you're going to start for your endowment is going to cannibalize your annual giving at least a little bit. So think about if your annual giving is strong enough that if you had a 10 to 15% reduction, you'd still be okay for your operations. You want to start talking to your long-term patrons first about legacy gifts. You can talk to them about the possibility of making a bequest. And as I said, you don't want to cannibalize your operations, or at least limit how much you'll cannibalize your annual gifts. So you want to talk to your donors about this being something that would be an additional gift if they're able to give it, not instead of their annual gift. You also want to make sure that you're tracking investment returns and board accountability. When you start an endowment, when you're thinking about how much to release from the endowment to support your organization's operations annually, each state has adopted their own version of the Uniform Prudent Management Institutional Funds Act, and we call that UPMIFA for short. So you want to check your state for your board's fiduciary duties. In general, if you're using 7% or less of the endowment over a 36-month rolling average at the value of the endowment, that will generally keep the board's fiduciary duties safe. But you definitely want to check your state's regulations, particularly if your endowment is underwater. Then you want to evaluate your investment returns frequently in order to maximize them. So we recommend doing that at least quarterly. Okay, so here we have another poll question. I believe this is our last one. So last chance, if you want to get that CPE, which revenue diversification strategy are you most excited to leverage? Leveraging existing assets for additional earned income, connecting and collaborating with community, utilizing automatic membership renewals, or leveraging investments. So we'll give people a little bit to respond here. Just if you want your CPE, stop what you're doing and answer the question on the screen here.
Just a few more seconds. Respond to the poll. If the poll's not popping up for you, you can refresh. Okay, just a little bit more. All right, let's go ahead and publish results.
Okay, so looks like the most popular response was that connecting and collaborating with community. I know that's Justine's favorite as well. So that's great to see. And then leveraging existing assets for additional earned income is next. So those are some great things to see.
Okay, so let's talk about how do you know if your revenue strategy is working and you should continue to do it or shift your focus. So the most important step in our efforts to diversify revenue and grow it is what we do afterwards, after we implement a new strategy. And that is we need to monitor the revenue results expected through timely comparisons to actual results, right? So we need timely actual results. So we do need financial reporting in order to do this. And sometimes that could be daily or weekly or monthly. If you're in a cash crunch, which I know a lot of arts organizations are right now, then you may want to be doing this daily or weekly and really evaluating that cash forecast and making recommendations and shifting your strategies, kind of keeping yourself nimble and flexible here. You also want to be looking at any significant deviations, and you want to elevate those to the board. Okay, board, we're going to do this new revenue strategy. This is what we're anticipating. This is what we forecast. Wow, everything comes back gangbusters. We make way more money than we thought we were going to make. Well, we want to sit down and we want to Monday morning quarterback that with the board and say, how are we so successful? Or in the opposite case, if it crashed and burned and we didn't make any money and instead put a bunch of resources into this, what did we do wrong? What went wrong? What went awry? Let's evaluate that with the board so that you can make the decision whether or not to continue those strategies or whether or not to discontinue if there's just an adjustment that needs to be made. So you really want to make sure that the board is evaluating your financial results within 2 to 3 weeks of the month's end. So you don't want to let that information get stale and reduce your amount of flexibility and the amount of time you have to respond.
Okay, there are a few different methods we can use to evaluate our success. One is efficiency, which compares what is produced to the resources used to produce it. A common calculation that we use to measure efficiency is the fundraising efficiency ratio, which compares how much money was spent on fundraising versus the amount raised. So the average for major fine arts companies is 20 to 25 cents spent on fundraising per dollar raised. And we can also look at profitability, which is our revenue, both contributed and earned, less our expenses. And here we want anything positive. And another return on investment calculation we can look at is the asset turnover ratio, which is the unrestricted revenue over total assets, and we want to see that ratio be greater than 1.
So when we're looking at evaluating, we want to make sure that we're evaluating quantitative and qualitative. So in that kind of qualitative range, we're looking at, does it serve your mission more effectively or efficiently than an alternative revenue strategy? Is this the best use of your company's time? Does this serve your sine qua non, which is really just what is essential to your mission? And you always want to be looking at that because, you know, mission is money, money is mission, and your money should always be following your mission. So always evaluating, is what we're doing serving our mission, and could we be serving it better? So this is a qualitative impact versus return. We're really looking at our impact investment. What was the return on that? How much impact did we have? And then profitability, this is that quantitative evaluation. Did you allocate overhead? Did you include the salaries of providing this? Because if they weren't working on this, they would be working on something else. So that's a true cost of doing this. That's how you calculate those opportunity costs. So what are we not doing because we're doing this? We really want to evaluate that and make sure that this is our best choice. And then decide before you implement the strategy what success looks like. What are your KPIs? What does incremental success look like? The first year that you do that Artist for a Day program, is it that we get 10 people to sign up and we make $10,000 on that? Is it we get 10 people to sign up and we make $100,000 on that? What is going to be successful for you? And what is maybe not the screaming success we want it to be, but we're making enough that we would consider continuing this? Figuring out those metrics before you begin will help you to evaluate your results more objectively after you've completed that implementation process.
Okay, so let's recap the important points from today's session. First, arts companies are still recovering from the pandemic when it comes to being affected by inflation and slow audience return. Compare your organization to your industry benchmarks to help you determine which revenue diversification goals are right for you. Make sure you consider all types of revenue diversification strategies, contributed, earned, and investment revenue. They can all help you serve your mission. Set goals prior to implementation, evaluate results against goals in a timely manner, and use qualitative and quantitative methods of evaluation to determine whether to continue a particular strategy.
So we have thank you everyone for joining us. We have just 5 minutes left to talk about, to answer some questions. I've been kind of furiously responding to questions in the chat. Anytime Maria was covering a slide, I was responding. So I'm just going to kind of scroll through, pick a few questions. Okay, so the first question, how do you decide about whether or not to use third parties versus your current staff and volunteers? I don't know if that's a political decision, because that would kind of be what's the political climate at your organization and on your board. But really, the answer to that question is, would you have the bandwidth to expand into that strategy with the staff and volunteers you have? And if you would not have that bandwidth, are you pretty well guaranteed to make back what you're going to spend on those third-party consultants on this strategy, right? So one of those opportunities might be on a special event. Special events take a lot of time to put together. And so does it make sense for you to hire somebody in-house whose job it is to plan special events? Or does it make sense for you to hire somebody who plans special events? Well, if you do one a year and that generates a decent amount of revenue for your organization, then you really just want to look at how much is the cost of that person planning it versus the revenue we're going to receive, versus if we didn't do it at all, because we would not have the bandwidth to do it, right? So you really have to kind of look at those three factors. The unrestricted assets over something else, that ratio. We will be sending out the slides, but I'll go back to the slide with the ratios on it. Let's see. I think that was this one. Nope. Yeah, so that's this one. So this is your asset turnover ratio. So that's unrestricted revenue over your total assets. And what that measures is whether or not you're raising enough unrestricted revenue. Really and truly, are you leveraging the assets you have to raise enough unrestricted revenue? Are there tax obligations if you rent out your space? Well, I will say, talk to a tax attorney, but rent out to a related organization that is similar in mission will not be on your UBIT, but verify with a tax accountant, because we're not tax accountants. Let's see. I'm trying to get through one more maybe before, and any questions we don't answer, we will try to get back to you. We will get a report of these, and we will try to follow up with you this week, Maria or I, to answer your questions. I see questions about, do we help to set up an endowment? Yes, we can set up policies for you. We can help you with the investment policy. We can, advise you on how that process works. We can really work through the strategy for you, forecast it, budget it, work through that with your board, train your board on how to handle an endowment and what kind of choices they have available to them. We will not give investment advice, but we will tell you, you should have an investment policy, and we will give you templates. Okay, let's see. I think we can get one more maybe. Okay, the difference between setting a membership or a monthly recurring donation that gets tickets, that's just how you're wording things. You can call it a membership, you can call it a monthly donation, you can call it a subscription, you can call them subscription members. There's lots of ways to market that. And one thing that we're seeing is as people move away from subscriptions, membership is an easier way to do this. So it's just really rebranding subscriptions to memberships. But museums have memberships that are annual, but you can move to a monthly membership fee as a museum if you think that would drive up your memberships. Just make sure you have them on an auto renewal if you do that. Okay, I think we're at time here. We will do our best to follow up over the next week. If you have any additional questions, this is our contact information. You can reach out to hello@YPTC and let them know you want to talk to Maria or I, and we will definitely respond to you. Thank you so much, and thank you for joining.
Thank you.